Hey, good morning. It's Mike Shunke with Berkshire Hathaway Homes and Shipton Properties in Scottsdale, Arizona. Friday morning market chat with Mike. We're going to talk about the residential market. We're going to talk about the commercial market, the economy, and we might touch on some concerning trends at the end there. Anyway, it's always been about inventory. Inventory still creeping up. Scottsdale, 1,432 single-family detached homes for sale, up another 19. Remember, supply's up 25% from last year, but we are still down 25% pre-pandemic. So, we still need more inventory to get that normal market going. But it's been a crazy week. I can't believe it's Friday. I can't believe it's 8 o'clock. I've been sitting here for a while. So, hey, Bonnie. Hey, Debbie. And anyway, we're kind of seeing this. It's been super busy this week. Like I said, what we do isn't sexy. I've been sitting here a lot on the phone and thing. If you're an agent, pick up your phone, please. That's kind of been the tone of this week. So anyway, I'm kind of seeing this bifurcation of the market. The higher end is just cranking along. The lower end, it's stuck. That's the affordability issue. But I think it's just setting expectation what people can buy. And, I don't set the markets. I just tell you the truth. Tell you what's out there. Show you what's out there, what you can get, what you can't get. So it's kind of this expectation. And remember, it's not always sales price. It's all the other expenses, the maintenance, the upkeep, the sales tax in Arizona. Ridiculously cheap compared to other properties. Especially, we were just in California last week, and it's unbelievable. Really, it's really unbelievable. So anyway, Bess Friedman, the CEO of Brown Harris, she's a big broker in New York, respected. She says, we're at a place consumers are realizing this is where we are. 6 to 7% mortgages, which that's pretty normal. That's historically. That's where we are. The banks need to make money. The lenders need to make money for taking on that risk. So if you can afford, for the majority of buyers for homes, it's just about that monthly payment. What can they afford per month? And it's just a balance. It's not just price. It's interest rates. And everything kind of comes down to that monthly payment, what they can afford. So, and expectations. Just get in the market. That's all. So we're kind of having... I expected buyers and sellers. It's my job to bring buyers and sellers together. We've still got some sellers that are hanging on there pretty high, and buyers, everybody's looking for a deal. But I feel like that spread's getting closer. I feel like people are just realizing, that's what's there. And it's a process. When you and I meet, if you tell me you want to buy a house, and you and I meet, I show you what's out there. And it's funny, half the time, a majority of the time, what the buyer initially comes to me and says they want is not what they end up buying. And it's, I just show them what's out there. These are your options. It's what exists. I don't make the market. I don't make the prices. But I help you get there. I show you what's out there and work to get you the best deal. So this is a funny business. It's a relationship business. A lot of what we do is referrals. But there's always, we do get new clients we work with. And there's always that feeling out point, gaining trust between each other. How do I know that they can afford what they're looking at? Well, I know, but and how can they trust me? And it's a process of, look, I'm here on your side. I'm here working for you. We're a team. Let's go get it. I don't care if you buy this house or that house or this house, or if you don't buy one at all. Whatever's best for you, you tell me you want it, and we'll go get it. So. And on the sell side, it's the same deal. What is it going to take for you? Where do you need to go? What are you looking for? Are you looking to downsize? Are you looking to upsize? Do you have equity? Do you have a reverse mortgage? How can we help you get to where you want to be? So it doesn't matter to me. I don't have to live in the house. So, anyway, it was kind of, we're getting that back together. It's funny. I saw an article that said Gilbert had the most inventory since 2005. That's funny because in 2005, Gilbert was mostly farmland still. And they've had some of the biggest numbers of apartment buildings. So, we look at single family detached homes. That's what our numbers look at. That's more stable on the residential side. And, all the other statistics you see, that's roofs over your head, doors to knock on. That's that's a usable space. So that's a house, a livable, a housing statistic. So, they say Gilbert has the most inventory. It's a scare tactics. Like I always say, pay attention to the details. Gilbert is pretty hot. Gilbert, Chandler, that's pretty hot. But again, you would be amazed at how many agents don't answer their phone. I called an agent 3 times yesterday, texted them twice. We want to make an offer on a property. So if you're listening to this, agent lady, call me, please. So I just don't understand, it's how that can. We're here for our clients. So anyway, you can choose to work with whoever you want. Anyway, on the commercial side, Nationwide Insurance came out with a report. City of Phoenix added 3,400 jobs in December. Phoenix ranked 6th in the nation for places that international investors are starting to put money into, and Phoenix was never even on the map. The big news, Core Power out in Buckeye. They pulled out of their deal. It was $1 billion battery plant out in Buckeye. Wow. Looked into it a little bit. They were getting $850 million in federal funding. That's going to be interesting when that all comes out. I'm sure the federal funding got pulled and they didn't, like I always say, you have skin in the deal on the commercial side. You got to have some skin in the deal. Otherwise, it doesn't make sense. And that's where we're kind of getting to with higher rates. Your pencil's got to be pretty sharp. You got to know what you're doing. Commercials, mostly investors anyway. So they pulled out of that deal. Somebody else will jump on that property. I think it's 7. I'm not even going to say. It's a big plot of land, and it's all rezoned. Actually, the contractor that's done the dirt work on it already is suing them for $10 million. So that's big for Buckeye, but somebody else will jump in there. That's hot. It's all been rezoned. So Nova Data Centers out in Mesa got approval for a $3 billion data center. That's $1 million industrial square feet. So industrial's still hot in Phoenix. People are realizing they can just, 5 hours down I-10, big warehouses and things. They can be in Phoenix and save on taxes just having their business just over that border. I think Quartzsite's an awesome place to put a big warehouse. I don't know enough about that market, why it isn't, but I think that's great. You're right over the line. You're on I-10, a major thoroughway. I think there's some good things. Actually, a friend of mine, Eric, he's got a big plot of land up in Kingman, probably right around $1 million. I think that's a good deal. If you're going to have to sit on it a while, but I think that's a good deal. So let me know if you're looking for, you'll have to sit on it. It's a risk, but it's a lot of acres up near Kingman on the way to Las Vegas, right along the thoroughfare there. So that'll be interesting. Sky Harbor had a record year 2024. That tells me Phoenix is hot. Scottsdale is hot. They're doing a $300 million renovation. That's good. That's good for business. Anyway, I did read that 25% of large malls are going to be closed by the year 2027. That surprised me a little bit, but it's good for the small mom and pop retail we've been talking about. That's a hot product right now. Investors realize that you can manage, a small strip area with maybe a bigger store, and you can get, 7 to 10% return on your money. So those are hot. I think they're great. Small medical, that's busy, and we do some stuff there. I also think 5 to 10,000 square foot contractor buildings are smoking hot. There's some, I talked to Jeff the other day, he's my SBA lender, and they've got some great deals on 30-year financing with like 10% down. So anyway, if you're looking for anything like that, looking to develop anything, give us a shout. We love working on those deals. And now to the economy. Jobs report came out this morning, most important economic number of the month. So anyway, non-farm payrolls rose less than expected. 143,000 jobs were created. They expected 169,000 to be created. But unemployment is still 4%. That's considered full employment. And Carl Cantanella on CNBC pointed out that is much lower. 4% unemployment is lower than we had in the 70s, the 80s, and the 90s. The part that's concerning a little bit for the bond market, the bond traders, is average hourly earnings were up 0.5%. That's half of 1%. So earnings had a big jump, actually the biggest jump since March of 2022. Fed likes to see that up about 0.3%. Yields kind of jumped around on the beginning, bond yields, up about 5 basis points now just below 4.5% on a 10-year. But, it's always interesting to see that knee-jerk reaction and what the market wants to do. But, that 4% unemployment, is that sustainable as wages are growing up? That's what the bond market's talking about this morning. Can you have full unemployment with rising wages and still keep inflation under control? We'll see. Who knows? Scott Bessent came out. He's our new U.S. Treasury Secretary. I really like him. Super brilliant. I like Janet Yellen too, but she was just humorous and got a little crazy in her old age. But anyway, Scott Bessent came out and said, we've got to focus on the 10-year note. Let's forget about the Fed as far as getting interest rates down and inflation under control. I've been saying this for at least a year or two. We've got to get government spending under control. Remember, the U.S. Treasury controls fiscal policy, government spending. The federal bank is a private entity, and they control monetary policy, the amount that banks lend to each other. As consumers, if we don't get that government spending under control, then rates are still going to be stuck pretty high. We still have $9.2 trillion of U.S. debt maturing this year. So that's got to be refinanced. Is that going to be instead of 4% or 2 or 3% when it took on, it's up at 4%? That's really the real reason we're seeing higher rates. So if we've got to get that debt under control, and this new administration is working on it. Remember, if you get debt under control, that's less spending. That means they have to issue less U.S. bonds, U.S. debt. That means the bond prices go up, bond yields go down. That's how they're going to get interest rates down, and it's finally nice to see that somebody's addressing it. Scott Bessent, good job. Anyway, and again, Elon and his crew are working on cutting that debt down. Some of this, I don't know if you've seen it, where I stand politically. I try not to talk about it too much. But I cannot believe that there's some people out there that are mad that he is discovering that what the government is spending money on. It's ridiculous. Take the time. If you don't follow it, take the time. Read where your money is going. It's insane. But anyway, I think that's going to be huge and a big shakeout. And that's going to be, why do we have $36 trillion of debt? It's absurd. So, it doesn't work whether it's your debt or the government debt or your business's debt. It's never a good thing. So it'll be interesting to see where that goes. This new administration is real small business friendly. So, there's a lot of optimism, a lot of excitement. I'm excited. The market's kind of got this energy to it. It's fun time. Life is fun, and this is a fun time to be living. So it's exciting. Concerning trend in real estate, you're seeing a lot of posts. I hope the public doesn't believe what they're seeing. I had someone send me a social media post. There's somebody advertising $3,000 a square foot in Paradise Valley. No way are they getting $3,000 a square foot. There were less than half a dozen sales in the past 6 months, over $2,000 a square foot. And, so I don't know if these influencers or whatever are just trying to boost attention and boost. I had another one said he had a property coming on the market for $30 million. I saw. There's no way. The highest sale in Arizona ever was 6 months ago. That was $32 million. There's less than half a dozen properties for sale, over 20 million. So if this guy thinks that property's coming on at 30 million, he's crazy. I don't know what he's doing. I don't know. I just hope the public's not buying into it. But anyway, we don't always deliver good news, but we'll deliver the truth, And like I said, we're about relationships, long-term relationships. We want to work with you. We want to work with your family. We want to work with your friends, your kids, your grandkids. I don't want to be here with your grandkids, but maybe my kids will be working with your grandkids. But anyway, that's why we do these live. You get to know me, I get to know you, and it's getting authenticity back into the market, and I feel like that's coming. I feel like this industry is really weeding out, and we're here to help you. So anyway, have a great day. Be smart, be safe. We'll talk to you soon. We've had a busy week. It's gonna continue to be busy. I don't think we're going to make it over to the golf tournament. If you do, have fun, be smart, please. And we'll be at Alpio's tomorrow morning, I think, for Cars and Coffee. So thanks for watching. I appreciate it. Have a great day, and we'll talk to you soon.